Rohr here with a concise highlight early on Friday, October 24th, 2014. It's currently 7 a.m. Central Time. And much like on Wednesday, this is going to be very concise because we're only covering the S&P 500 future. Everything else is thoroughly consistent with the video analysis and write-up in Thursday morning's Global View. And we still have quite a few interesting macro factors affecting the market, not the least of which is the first case of Ebola to be confirmed in New York City. And as we go on to discuss what all this might mean to the markets, we are getting about what we expected, with the S&P 500 future off about 4 at about 1,942, even though it had traded down $10 lower than that on the overnight low, probably when the news of the Ebola case first broke. And once again, the reason this is important is, as we noted, once things cleared up later last week, Ebola phobia, fear of a broader outbreak as opposed to isolated cases showing up, Ebola phobia has been waning ever since the congressional meetings and hearings and Mr. Obama's meeting where they isolated on how to contain any additional cases, and we mentioned they were probably only going to have a modest impact, and so far that's what we're seeing. So again, the S&P 500 down 4 at about 1942 is very interesting because, of course, that's right around the late session lows from yesterday. That support that we had said was going to move up to approximately the 1928 area or so by later on yesterday. Early today will be up around the 1933 area, and by later today, interestingly enough, it's going to be up toward 1950. And this is going to set up a real test for the market because even though it remains friendly, as you know, our next resistance was into the 1950 to 55 area, which we're not surprised that we saw on a test yesterday before the market backed off. Much above that, we would suspect you can move another $20 or so right away. Next resistances are 1975 to 78 and up into the 1985 area. That was the actual high of the lead contract going back into July before the market took the late July hit into early August. And again, the lower supports initially today, not surprisingly, if the market does decide to sell off further, down into about 1933, but even that would only represent a partial filling of the gap. And just to clarify, these Fibonacci numbers, levels I see are now a bit obscured. 1936 is an overrun Fibonacci resistance. Truth to tell, the market would probably have to fail back below Wednesday's 1925 close that gap and remain below it, 1925 to 20, to look really bad. And we're just not expecting that. Also, we have the next lower resistances all the way back in the low 1900 area, reinforced now by the gap higher, which is interesting because all of this was originally formed on the gap up to a new high back in late May, with the low end of the gap being about 1904. And that's pretty much it for the short-term view of the S&P, except to note that the continued bid has kept the hourly MACD consistently out above this upper runaway band, and that remains a constructive sign. So for choice, looks like the market might head higher before it would be in a position to have any kind of more substantial retracement.